Welcome to Wealth Hustle 247 podcast, your trusted guide to financial literacy, business innovation, and entrepreneurial success. Learn how to grow your wealth, make informed decisions, and turn your ideas into profitable ventures.
Did you know debt can be a powerful tool for building wealth? In this episode, we explore leveraging debt to create great wealth, strategies, and tips you can use to grow faster. Let's get started.
All right. Get ready, because today we're going to be rethinking debt. Yeah, you heard that right. Debt. We're diving deep into leveraging debt to create great wealth. And let me tell you, this document has some seriously surprising ideas about making debt work for you, not against you.
Yeah, it really flips the script.
Yeah.
Most people think of debt as like this big, scary monster, right?
Yeah.
But this document says, hey, what if debt could be a tool, like a lever that can help you multiply your investments?
Okay, I gotta admit, using debt to build wealth kind of feels counterintuitive. So break it down for me. What's this leverage thing all about in real life?
Okay, so picture this. You're trying to move a giant boulder, like a massive rock. If you just try to push it with your bare hands, good luck.
Yeah, that's not happening.
Exactly. It would take forever. But with a lever, suddenly you can move that boulder with way less effort.
Oh, okay.
In finance, leverage is kind of like that lever. It's using borrowed money, but you're using it to potentially amplify your returns on your investments, so you can reach goals that might have seemed impossible before.
So it's not just about spending borrowed money, it's about strategically investing it in stuff that could grow in value.
Exactly. It's like, let's say you want to get into real estate. Okay, you could save up for years and years to buy a rental property outright, or you could get a mortgage, buy that property sooner, and start earning rental income right away.
I see the appeal there, for sure. But I'm already thinking, what if the rental income doesn't cover the mortgage payments? Or what if the property value drops? Uh-oh.
Right, and those are totally valid concerns. Like any tool, leverage can be dangerous if you don't know how to use it. It can make your gains bigger, but it can also make your losses bigger if your investments don't do what you hoped. That's why it's super important to understand the difference between good debt and bad debt.
Okay, yeah, let's talk about that. What makes debt good versus bad?
So the key is what you use the debt for. Good debt is when you borrow money to invest in things that'll probably go up in value, or things that'll generate income over time.
Okay.
Like that rental property you talked about. That could be good debt.
Makes sense.
But also think like a business loan to start a company, or even student loans. But only if that degree leads to a job that pays well, right?
So it's not just about the type of debt itself, it's about the reason behind it. And will that debt help you make more money down the line?
You got it. On the other hand, bad debt is for things that lose value really fast.
Yeah.
Or they don't bring in any money at all.
Right.
Think of those impulse buys you make with a credit card. The ones with those crazy high interest rates, or a payday loan to cover an unexpected expense. Those are the kinds of debts that usually drag you down financially instead of pushing you forward.
Okay, that distinction makes a lot of sense. And you know what's interesting? This document actually dives into the unexpected benefits of using debt strategically. There's a whole section on the upsides of debt, which honestly, I was surprised by.
I know, right? It really challenges how we think about debt.
Yeah.
We already talked about access to capital, which lets you jump on opportunities without waiting years to save up. But there's also the potential for tax advantages. Like if you have a mortgage on an investment property, you can often deduct that mortgage interest on your taxes. And believe it or not, debt can even act as an inflation hedge.
Wait, hold on. Inflation hedge? How does that work? Everything's getting more expensive. How can debt possibly be a good thing in that situation?
Yeah, I know. It seems counterintuitive, right?
Yeah.
But think of it this way. Let's say you've got a fixed rate loan, like your typical mortgage. Your monthly payments stay the same over time, even though everything else is getting more expensive because of inflation.
Okay.
But the key here is that inflation eats away at the value of money. So those fixed payments, they actually become easier to make as time goes by, because the dollars you're using to make those payments, they're worth less.
Okay, so while everything else is going up, your debt payments stay the same, which actually makes them easier to manage over time. But how does that translate into actually building wealth?
Let's think back to that rental property. Not only are your mortgage payments getting relatively cheaper because of inflation, but the property itself, what's probably happening, it's going up in value.
Right.
So you're winning on both sides. Your debt is kind of shrinking while your asset, the property, is growing.
Okay, I'm starting to see the bigger picture here. This document has really made me rethink how I view debt, but now I'm really curious about how we actually put this knowledge into action. What are some concrete strategies for using debt to build wealth?
Well, this document lays out a whole bunch of strategies, from the more traditional stuff, like real estate investments and business ventures, to some less conventional approaches. Things like land banking and investing in passive income streams. We'll dive into all that.
Okay, let's do it. I'm ready to explore this whole world of strategic debt and see how it could maybe help me reach my own financial goals. You know what really clicked for me? Those real-world examples we talked about in part one. It's one thing to hear about the theory of leveraging debt, but when you see how real people have actually done it successfully, it makes it all feel so much more real.
Absolutely. It's inspiring, right? To see how people have turned debt into something that helped them build wealth. And this document is packed with examples, from famous business people to everyday investors who've made smart moves with leverage.
So whose story really stood out to you?
Well, we talked about Elon Musk a bit earlier. And his story is a great example of how strategic debt can fuel some seriously big ambitions. You might not think that someone like Musk, the guy behind Tesla and SpaceX, would use debt so much. But he knew that if he managed it carefully, debt could give him the money to make his companies grow faster and achieve things that might have taken way longer if he'd just relied on his own funds.
I think a lot of people, myself included, tend to see debt as something that holds you back. It feels limiting. But Musk's example almost flicks that on its head. It's like he used debt to break free from limitations.
Exactly. Take Tesla, for example. When they were starting out, electric cars were seen as this niche thing. Tesla had a tough road ahead to gain market share, so Musk went ahead and took on a lot of debt to build that massive gigafactory in Nevada. A lot of people thought it was a risky move.
Yeah, I remember that. People were skeptical. They didn't think enough people would want electric cars to justify such a huge investment.
But Musk had a vision, right? And he believed that strategic debt was how he was going to get there. That gigafactory let Tesla ramp up production, which eventually brought down the cost of their electric cars, making them more affordable for everyday people. It was a bold move, and it definitely paid off.
It shows you how debt can actually drive innovation. It let Musk take a calculated risk and really speed up the shift to sustainable transportation. It wasn't just about him making money, it was about using leverage to change the world.
Exactly. And it's not just about these big names like Elon Musk. This document also talks about all sorts of everyday people who've used leverage to build wealth in different ways. Some people use loans against their homes to buy rental properties. Others took out business loans to start small companies or invest in franchises.
That's what I find so empowering about this whole concept. Leveraging debt isn't just for the super rich. It's something anyone can learn to do if they approach it the right way.
Absolutely. Take real estate, for example. A lot of people have built a good chunk of their wealth by using mortgages to buy rental properties. The rent they collect helps cover the mortgage payments. And as time goes by, they build equity in the property while it hopefully goes up in value.
But I'm guessing success in real estate, even with leverage, takes more than just buying any property and hoping for the best. What are some of the important things to think about when you're using debt to invest in real estate?
You're right. It's not a guaranteed win. You have to do your homework and plan carefully. Things like location, the type of property, how much demand there is for rentals in the area, and what the local market is doing all matter. It all affects whether a real estate investment is going to be successful or not.
So you really need to know the market you're getting into and be realistic about the potential ups and downs. It's not about chasing quick profits. It's about being smart and having a long-term plan.
Exactly. And that goes for any investment strategy that uses leverage. Whether it's real estate, starting a business, or even playing the stock market with borrowed money, research and a clear plan are crucial.
Speaking of the stock market, that's one area where I always get a little nervous about leverage. I know some people use margin accounts to borrow money to buy stocks, but that feels a bit like playing with fire, doesn't it?
It can be, yeah. It's definitely not for everyone. Margin trading can make your gains bigger, but it can also lead to huge losses if the market turns against you. And if the value of your investments dips too low, you can get hit with a margin call, which means you got to put more money into your account to cover the losses. And if you can't do that, your broker might sell your investments, potentially leaving you with big losses.
Yeah, that's not a risk I'd be comfortable with. But are there other strategies that could use leverage in the stock market? Ways to potentially make money from borrowing without taking on that much risk?
There are, but it requires a different approach. Instead of trying to time the market and make quick profits, you can use leverage to build a portfolio of different assets that are likely to grow over a longer period. Like you could get a loan with a low interest rate and use it to invest in a mix of stocks, bonds, and exchange-traded funds, those ETFs you hear about.
Okay, that sounds more like the long-term strategic approach we've been talking about. But wouldn't the interest you pay on the loan eat into your profits? How do you make sure the gains outweigh the cost of borrowing?
That's where careful planning and being realistic about what to expect come in. You need to shop around for loans, compare interest rates, and project what your returns might be based on how the market has performed historically. And you got to think about your own risk tolerance and what you're hoping to achieve with your investments.
This is starting to feel a bit overwhelming. There's so much to consider. Where does someone who's new to all this even begin to figure out the world of leverage and investments?
It's understandable to feel a little overwhelmed. But remember, learning is key here. Don't be afraid to look for resources, talk to financial advisors, and take the time to educate yourself about the different options out there.
That's a great point. It's not about becoming an expert overnight. It's about taking it step by step and building your knowledge and confidence.
Exactly. And as you dive deeper into all this, you'll discover a whole bunch of strategies and opportunities. Besides those more traditional approaches we talked about, there are some less conventional methods for leveraging debt, like land banking and investing in those passive income streams we mentioned.
Those are two areas I'm really curious about. Land banking sounds interesting, but also a bit risky. And I'm always looking for ways to create some passive income.
Let's dig into those a bit more then. Land banking, like the name suggests, is all about buying land that hasn't been developed yet. The idea is to buy in areas that are expected to grow a lot in the future.
So it's kind of like making a bet on the future, hoping that the value of that land goes way up over time. But how does leverage fit into this strategy?
Well, land can be expensive. It often takes a big chunk of money up front to buy it. So a lot of people use loans to finance land purchases, hoping that the increase in value down the road will more than make up for the cost of borrowing.
It sounds like a long-term game, one that requires a lot of patience and being okay with uncertainty. What are some of the potential risks and rewards to think about when it comes to land banking?
The potential payoff can be huge if you pick the right spot and time the market right. If the area starts to boom with growth and development, the value of your land could go through the roof. But there are also some big risks to consider.
I imagine one of the biggest risks is that the growth you're expecting just never happens. What if you buy land in an area that doesn't develop the way you thought it would?
That's a very real possibility. And that's why research and careful planning are so important. You need to look at things like population trends, economic forecasts, plans for infrastructure development, and zoning regulations to get a good idea of whether an area is likely to grow or not.
So it's not just about finding a cheap piece of land and crossing your fingers. You need to understand how real estate development works and make a calculated decision.
Exactly. And even if you're right about the growth potential, land banking often takes a long time to pay off. You might not see a return on your investment for years, maybe even decades.
That's probably a level of patience I don't have. Maybe those passive income strategies are a better fit for me.
Well, passive income streams can be a good option if you want to make money without actively working for it. And leverage can help boost those returns.
Okay, tell me more. What are some examples of passive income streams where leverage might make sense?
One example we talked about earlier is investing in rental properties. The rent you collect gives you a consistent flow of cash. And if you used a mortgage to buy the property, you're using leverage to build equity in something that's also making you money.
Right, it's a win-win. You're building wealth through both the increase in the property's value and the cash flow from rent. Are there other passive income strategies that could involve leverage?
Definitely.
Yeah.
Another option is investing in stocks that pay dividends or real estate investment trusts, those REITs. These investments can give you regular income through dividends, and you could potentially make those returns even bigger by using a loan with a low interest rate to buy more shares.
I see. So instead of just using your savings to buy a certain number of shares, you could borrow money to buy more and potentially create a bigger stream of passive income.
Exactly. But just like any investment strategy that uses leverage, there are risks involved.
I imagine one big risk is that the dividends go down or disappear completely. What happens if the companies you invest in hit a rough patch and can't afford to pay dividends anymore?
That's a valid concern. And it highlights why diversification is so important. Instead of putting all your money into one thing, you should spread your investments across different companies and industries to reduce the risk.
It's like that saying, don't put all your eggs in one basket, right?
Yeah.
Diversification helps protect you if one of your investments doesn't perform well.
Exactly. And another key thing to think about is the interest rate on the loan you're using to finance your investments. If that interest rate is too high, it can really cut into your profits and wipe out any benefit you get from using leverage.
Right. It's a balancing act between making the most of your returns and keeping the cost of borrowing under control. This is starting to feel like a pretty complex equation.
It can be, but that's why it's so important to do your homework, get advice from experts, and take a calculated approach. Using debt to your advantage can be a powerful way to build wealth, but it's not some magic solution. It's careful planning, discipline, and being willing to learn and adapt along the way.
This has been an amazing journey so far. We've explored so many strategies for leveraging debt, from those more familiar approaches like real estate and business investments to the less conventional methods like land banking and passive income streams. And while it's clear there are risks involved, there's also a ton of potential for those who are willing to embrace this concept of strategic debt. Man, we've covered a lot of ground in this deep dive, from real estate and businesses to land banking and passive income. It seems like the possibilities for using debt to build wealth are just endless.
Yeah, it's been quite a journey, and we've really just scratched the surface. There's a whole universe of strategies and techniques out there for anyone who's willing to explore what strategic debt can really do.
I'm definitely feeling inspired, but I'll admit, a little overwhelmed too. There's just so much information. As we wrap things up, maybe we could try to distill it all down into some key takeaways for our listeners. What are the most important things they should remember when they're thinking about using debt to reach their own financial goals?
Okay, yeah, good idea. Let's try to sum it all up. If I had to pick a few essential principles, I'd say first and foremost, debt is a tool. It's not some magic answer to all your financial problems. It can help you boost your returns, sure, but it can also make your losses worse if you're not careful.
So it's not about just piling on debt for no reason or falling for those get-rich-quick schemes. It's about being smart with it, using it responsibly, and understanding the risks involved.
Exactly. The second thing I'd emphasize is that knowledge is your best friend here. The more you know about the different types of debt, how different investment strategies work, and how to manage risk, the better decisions you'll make. Decisions that make sense for you and your goals.
So do your homework, everyone. Don't just jump into something without really understanding the potential risks and rewards. Read books, talk to financial advisors, take some courses, and don't hesitate to ask questions.
Couldn't agree more. And that brings me to the third point. Always have a plan. Before you even think about taking on debt, figure out what you want to achieve financially, think about how much risk you're comfortable with, and come up with a clear strategy for how you're going to use that borrowed money to get to where you want to be.
It's like building a house, right? You wouldn't just start building without a blueprint. Same thing with debt. You need that solid plan to guide you and make sure you're headed in the right direction.
Exactly. And lastly, remember, this is a journey, not a one-time thing. The financial world's always changing, so be ready to adapt, learn from your mistakes, and adjust your strategy as you go.
I love these takeaways. So practical and empowering. Okay, before we sign off, I have one last question that's been on my mind this whole time.
Go ahead. I'm listening.
If using debt strategically can be so powerful, why aren't more people doing it? Why does debt still have this negative reputation for so many people?
That's a great question. I think there are a few reasons for that. I mean, let's be real. Debt can be scary. It comes with risks. And the thought of facing financial trouble, it's a real concern for a lot of people.
No doubt. The idea of owing money, especially a lot of it, can be super stressful.
Of course. And the messages we get from society often just make that fear worse, don't they? Debt is portrayed as this shameful thing, something to avoid at all costs.
Yeah, it's like we've been programmed to see debt as the enemy, something to run from.
Exactly. And while it's true that borrowing irresponsibly can get you into trouble, what we've been talking about today is a different way to look at debt, a way to use it as a tool to build wealth when you approach it with a plan and a good understanding of how it works.
It's about changing our perspective, right? Seeing debt not as something to fear, but as a potential partner in our journey toward financial freedom.
Right on. And that's the message I hope people take away from this conversation. Debt isn't inherently good or bad. It's what you do with it that really matters.
Okay, so as we wrap up this awesome deep dive, let's leave our listeners with a question to ponder. What could debt help you achieve? What's one small step you could take today to explore how to use debt for your own goals?
That's a perfect way to end things. I hope everyone takes some time to think about that. Remember, knowledge is power. Taking that first step to learn more about debt, that could be the key to unlocking your financial potential.
This has been such an eye-opening experience. Thanks so much for sharing your insights and knowledge with us.
The pleasure was all mine. I hope our conversation today has encouraged you to see debt in a new light and to explore how it can help you reach your financial dreams.
To all our listeners out there, keep learning, keep growing, and keep pushing those boundaries. And as always, happy investing.
That's it for today's episode of Wealth Hustle 247. Be sure to follow, like, comment, and share with others. Keep pushing toward your goals, and we'll see you in the next episode.